I would now like to invite Mr. Bernard Sinnaeve from Deloitte, who has traveled from abroad and joined us. And he's going to deliver a presentation, and he's the DTL Strategy Director with Deloitte. Mr. Bernard Sinnaeve, let's give him a hand. There you go.
The clicker. Sorry, the clicker for the presentation.
For the presentation.
Thank you. Thank you, everyone, for being here and for hosting us. It's a pleasure to be here, and both Saki and I, you will meet Saki in the afternoon, are feeling very honored to be here in your presence today. I will talk about digital transformation, but maybe even reflect for just a couple of minutes on what I've been hearing so far, because I've heard a couple of times. Yeah, thank you. What I've heard a couple of times is a little bit of the impression that Pakistan is trailing behind on the West, as it was said, but catching up. And I think that's probably a fair reflection of how we look at it as well. What I would say is that wherever we go in the West, whenever we speak with our clients, they are struggling as well. There is no end point to digital. It keeps on going and going and going. It's not something that you can adopt and implement with different stages of maturity and where you can reach 100% and be satisfied. So what we do in our day-to-day jobs is exactly as what the process that you are going through. And that's where I believe that we could be of help. So what we do at Deloitte, and also a little bit to introduce what my colleague Saki and I are doing, is we look at digital from strategy inception all the way down to execution. So we help clients not only to define what the strategy needs to look like, but also to come up with a realistic roadmap, to look at what the design could look like, and Saki is the expert in that and we'll be talking about that later. But then also we have the capabilities to help to implement. Now, of course, this is not a promotion speech to Deloitte, even if I would like that to be it. But what we would recommend is, and that's also the message that we're giving to our clients in Belgium or the UK or elsewhere, all banks are struggling with this. Very few banks can do it on their own. There are a couple of exceptions. But what we would recommend is when you are struggling, look out for help. Look out for peers, for colleagues that you can work with from other banks, form networks, and if need be, reach out to a consultant who has done this before, because this is too important to lose time, because time will be of the essence here. Now, taking a step back, what does digital mean? You will say that is common sense. Well, remarkably, it isn't. When we ask execs what does digital mean, we often hear it's about technology, it's an important channel, but digital is much more than that. According to us, it's a new era. You really need to look at it in the grand scheme of things and in the history of time as a new industrial revolution. If you look at the technologies that we've adopted over the last couple of decades, that is now expanding exponentially, and it is opening a new world of opportunities. We're now sort of that brink between 2010 and 2020, where we are convinced that the world that we know today is being disrupted as and when we speak, right now at this very moment. Now, a lot of our clients in the West, if I may say so, have made the error in the past to think that they will not be impacted. Because they always said, yes, technology, media, those are the new sectors, but banking will not be impacted. Of course, today we know that that is not the case, and I don't need to explain that to you. At Deloitte, what we have done is we've done a study to understand how big the impact is going to be in various industries and how soon it will come. It's sort of the fuse and the bang, if you like. And there you can see that banking is right behind media companies. And I think one of my predecessors talked about Nokia. Nokia is, of course, a prime example of a product or of a brand that had the difficulty of not seeing the disruption coming, being the iPhone with the new interface, with a very different approach to how it looked at customer engagement. Nokia missed that. And in just a couple of years' time, Nokia went from being the largest producer to being, well, now they've reinvented themselves because they're a 5G player working on network infrastructure. But as a phone producer, they're done, they're dead in just a couple of years' time. The same can and will happen to banks if they're not careful. And that's the message that we're giving to our clients as well. Now, where is the threat coming from? You've already mentioned some of the names. For us, if you look at what is happening in the markets, we clearly see that there are new players on the block, and we divide them between the Davids and the Goliaths, if you like. The Davids are the small fintech companies. You have a lot of them in all over the place, of course. The Goliaths are the GAFAs and their equivalents in Asia that are really having the significant investments that are required to come in and take over an industry like Alipay is doing in Asia at the moment. Now, this doesn't necessarily mean that you'll be out of a job in a couple of years' time. It just means that you're competing with new types of competitors who have different games and tactics that they are using to convince the customer. And you need to put yourself in the shoes of that customer, as one of my predecessors rightly explained. As a side project in the last couple of months, I've also been working with the European Commission to understand how banks, incumbents, can work better together with those fintech companies. You don't necessarily need to consider these as threats that are going to take over your business. Some of them can actually help accelerate your digitization journey. That's particularly the case for fintech companies. Some of those fintech companies will go to market with their own proposition, but a lot of them will never do because they don't have the network, the skill, the expertise of the customers that you have. They don't have the relationship managers, but they do have other things that you can bring to the table. So what the European Commission is doing at the moment is looking at how it can create a level playing field where both fintechs and the incumbents can work together to create innovation across the European Union. Now, for the GAFAs or the GAFAMAs or whatever you would want to call them, there, of course, the impact that these players can have will be much bigger because of the investments that they can bring and the relationship with the consumer that they already have. I've heard earlier today that the role of the relationship manager will remain important. We believe that too, but don't believe that it will stop the disruption. Companies such as Amazon, Airbnb, and others already have a relationship with the customer that you necessarily are not having through your relationship manager. Yes, it is a personal contact, but you would be surprised at how good the engagement level of these companies is. Now, what you can do is try to learn from them. What are the things that you can integrate within your own approach to make sure that you are more customer-centric? And then, of course, the thing that you can learn is to be more customer-centric, to have a better user experience, to don't think about product push, but about pulling customers, about using new technologies, about giving real-time information, and about being data-driven rather than segment-driven. Too often we look at customers and we segment them based on their revenue levels or their assets. It's not working. You need to look at customer needs and from there derive what the best possible solution for a client would be. Next to that, it's our strong conviction that banks should also be looking at building their own platforms. It's quite simple. It's eat or be eaten. The future will be about open banking, will be about having platforms, and then it is better to be on the forefront, to establish the platform, or to become part of one. It's also in that regard that I was speaking to one of my colleagues earlier, and I was quite impressed with what is happening with the microfinance banks in Pakistan at the moment, and with how they are teaming up with telcos to really make an impact in the markets. Also from a financial inclusion perspective, I think that for Pakistan that is a very good thing, and probably something that will reinforce or accelerate your digitization journey. If you look at the future of that open banking, what it means is that banks will no longer have the full control over access to the customer. They will need to share that somehow. And it is better, in our opinion, to still be the dominant player, the linking pin within that network, than to become your own isolated network with no other parties included and with a trailing customer base that is not going to protect you to absorb the evolutions of the future. So this is what I talked about, open banking. It's a platform-based approach. We see it a lot in Europe. In Europe, we've had regulation, PSD2, which has changed how payments are made in Europe. Essentially, it allows for companies such as Amazon or other players to directly initiate payments from their own website without having to go through a third-party bank. That means that those players that we've already talked about get that direct access to the customer. And as a result of that, the European Commission has been thinking about how can we create an environment where we have open banking and where banks are forced to collaborate with each other. So what the Commission has said is that every bank, if it requires so, should be able to get access to data of customers that sits in other banks. Of course, respecting data privacy regulations, etc. But as a result of this, you will see a much more fierce competition between the different players. And that's not future. Of course, PSD2 is something that was launched a year ago, but the most advanced banks are already working on it today. If you look at Citi or at Barclays, they've all developed API hubs that can easily interact with other banks or with non-banks. And also for PSD2 are integrating all of those parties within their environment. Within the next 12 months, it is mandatory for all European players to open up their networks and their infrastructure to non-banks. That doesn't necessarily mean that all of those non-banks will start talking to all of the players, but the level playing field is changing. And what we see in the markets is that the European Commission, through its regulatory initiatives, is actually taking a lead on other regions. It's the same with GDPR, and I think we mentioned Facebook earlier. I don't need to tell you that data protection and data privacy is of utmost importance to clients, and they are actually in the process of discovering that. And it's through scandals with Facebook where people actually discover how their data is being used, that sensitivity is increasing. Now, when the Commission launched its GDPR initiative around data protection, the first feedback from the industry was, oh no, not more regulation. But now we're starting to see that protecting your consumers, putting the right safeguards in place is actually going to create competitive advantage in the international playing field. And then, of course, and I'll be brief about that because you know that, there is the expectations of consumers which are radically shifting and changing and are becoming ever more real-time. I want it now, I want it in a nice way. And it's not the banks that are setting the tone there. To the contrary, it's the retail companies and the retailers and the e-retailers who are dictating the pace of tomorrow. A consumer is looking at his bank the same way as it is looking at a retail shop or any other place. We need to be able to keep up with that level of expectation. That's the minimum bar we need to get to. The funny thing is, if you ask banks how they are doing, that most think that they're doing well because they have a customer experience lead and they're investing in digital and they're investing loads of money in technology. Yes, there are a lot of investments that are being made. It's not necessarily about not making the investments, it's about whether you put the customer central in everything you do, whether you have the right mindset and whether in the way that you adopt design and that you think about your digital strategy, whether you do that with the end customer in mind. And this afternoon, Saki will again talk a little bit about how you do that, and then in the workshop tomorrow we can make that we can turn that into practice with you. Just a couple of examples, and I'll be short about that. But what do we mean when we say design is important? I think if you look at this, I invite you to think about how you should best be washing those clothes that you really like. It's confusing, and if you go to banks' websites today, a lot of that is still confusing. I heard earlier that clients like simplicity and prefer 2 products over 50 products. That is actually correct. So we did a a project for a French insurer a while back and looked at their digital portfolio of products. And we decided to reduce the number of products from 50 to 2. And we gave them very intuitive names, King and Kong, with a brief explanation of what they were. And what we saw is that the uptake in product selection was significant. So if you give clients less choice, they will sometimes increase the number of products they will buy from you. And why? Because clients don't have a lot of time, don't want specifications, they want explanations of how your solutions can help them and provide it in a digital and intuitive way. This is the old-fashioned way, it's not working. This is how it should be. It's a door handle. You use it on a day-to-day basis. No one has to explain to you how it works. And actually, if you ask a child of 4 to open a door, it can do it as well. It's intuitive. The same way as Apple is intuitive, and the same way as the platforms that you are building and constructing also needs to be intuitive. And of course, Google is the lead in that. This is where design and artificial intelligence can go hand in hand to almost predict what you're going to ask or predict what customers are going to ask for and the product that would be most tailored to their needs. Now, does this mean that Bill Gates is right when he says that banks are not needed anymore? It's a controversial statement, and I personally don't believe it. I think banks will still be needed in the 21st century and for the centuries to come. The level playing field is changing, which means that there is new competition that you'll need to be able to face off with, but there is still a future for banks, and you have the advantage of knowing your customer base and having the RMs in place to be able to connect with the customer. But don't put all of your hope on that. It is an asset, but it's not going to be sufficient. You will need to adapt. Now, I give one example, and there are many others, but account aggregation is something which is also a big topic in Europe at the moment, where you have accounts with different banks, and with one aggregator, you can actually see how much money you have in which accounts. And with PSD2, you'll also be able to make payments from those accounts through that third-party app. Banks essentially have the choice now. Do they want to become aggregators themselves? Do they want to embrace this kind of digital innovation? Or are they going to sit back and see what happens with the risk that someone else is going to aggregate them, that they will lose the access to the customer, and that they will become a back office for someone else's business? That is the risk and the threat that banks are facing. And therefore, in our opinion, the question whether banks will survive or not is wrong. They will survive. But the question should rather be on what they need to do to make sure that they remain relevant, and what they need to make, what measures they need to take to adapt to the changing environment that they're now operating in. And this is what brings us to digital transformation. And that's what it should be about today. As said, in Europe, we have a history of 20 years of working on digital transformation. We know what it is about. You're not as far as we were, or as we are today, but you don't need to go through all of those steps again. You can skip a few, and it can go fast. If you look at Southeast Asia, it can go very fast. If you have the right level playing field, if as a regulator we make the right decisions to promote innovation, and if as companies we embrace that, we make the necessary investments, and we build on our digital transformation journey. Thank you.